Good morning, everyone. This is Justin Nielsen along with Ed Carson. We're here at the Investors Business Daily Studios, live in Los Angeles, and we've got your January 7th market update. So today we're going to be looking at a little bit of Eli Lilly, because there's been a lot of stuff going on in the biotech world. We'll take a look at some of the ETFs and Twilio. But first, let's go ahead and check in with the market indexes. We've got the Nasdaq Composite that's up 0.9%. We've got the S&P 500 up 0.6%. And the Dow Jones Industrials up 0.3%. Last week was a lot of stuff going on with the market indexes. What was happening?
Well, it was up and down for a little while, but on Friday we had a really strong day after Fed Chairman Powell said, "I'm listening, I'm patient, I'm flexible," strong jobs report, and so we had a follow-through day on the S&P 500, which is sort of a green light. Then a confirmed uptrend suggests that big institutions were stepping in. It wasn't a follow-through day on the Nasdaq, which we're looking at now. That had really strong price gain, but it wasn't quite. It didn't have higher volume than the day before.
Okay, so now when you have the S&P 500 and the Nasdaq kind of almost giving mixed signals, is that a concern?
Well, I mean, obviously you want to have it on at least one index. It would be great if it were on both. And the Nasdaq was up a lot. I mean, one mitigating factor is Apple had a lot less volume on Friday than it did on Thursday when it plunged 10%. You know, maybe the Nasdaq will follow through itself in the coming days. That'd be nice. I think what you want to see is more positive action. And we've had two previous follow-throughs. They both were one after 7 days, one after 8 days, and then immediately the market fell off. We had a follow-through on day 7. Hey, we might actually have an up day.
Right, yeah.
The day after a follow-through day.
That's always a good thing, you know, when you see a follow-through on the follow-through.
Yeah, you really want to see that momentum and see growth stocks really start to take off.
Yeah. So now that's another question here, is that we aren't seeing necessarily a plethora of growth stocks that are setting up in proper bases. What do you do with that situation?
Well, it is tough. I mean, there's a few that are doing all right, and there's some that are setting up, but you know, it's not that surprising when you have that big, violent stock market correction, bear market on the Nasdaq and S&P. It really does come down to, you know, these charts have really got hit. Even leading stocks with relative strength lines at record highs, they were actually like below long-term support levels in many cases. So you just sort of have to, you know, there's various ways you can play it. Some are coming in. It does make it a little bit more confusing.
Well, and it seems like right now what we're paying the most attention to are those high relative strength stocks. The stocks with the relative strength lines going into new high ground. But as you said, the charts are still a little damaged and might require some time in order to get those sound base patterns that we're used to seeing, the cup with handles, the double bottoms, and so on.
Yeah.
Okay, now let's take a look at Eli Lilly. Eli Lilly has just made an acquisition, so there's a lot of merger and acquisition activity going on in the biotech industry.
Yeah, Eli Lilly is going to buy Loxo Oncology for $8 billion. I think it's $235 a share in cash.
Yeah, that's right.
Big premium, 68%. You know, actually, it's the second big cancer-related big pharma buying, of a biotech deal. Last week, Bristol Myers agreed to buy Celgene for what was then worth $74 billion.
Yeah, that's a big one.
That's a big one. Eli Lilly, when we were talking about all these bases not doing that well, Eli Lilly's actually one of the best looking out there. I mean, it's got a base-on-base type of formation. It tried breaking out even in early December. Didn't really break down, and it's holding above or right around the 50-day line today. You know, it's actually looking pretty strong.
And that's one of the things that, the stocks that are above the 50-day moving averages right now really stand out as like, oh, you're something special because, so many are below their 50-day moving averages and their 200-day moving averages. What does this do for Lilly, adding Loxo onto there?
Well, they're trying to become more into cancer fighting. That's really been a big push. I mean, immunotherapy, there's a lot of, that's why it drove the Bristol Myers Celgene deal. That's obviously a promising area for drugs. And so Eli Lilly is trying to beef up its pipeline, and this will hopefully do that.
Right, and it gets into that precision medicine where it's targeting the gene, the gene errors that are happening. So that's something that Loxo is definitely very good at. So now let's talk a little bit about how to participate in this, because sometimes it's difficult for individual biotech stocks. They can be so volatile. One FDA approval and you're either up a lot or down a lot.
It can be pretty crazy, and it's hard to jump in. It's hard to get breakouts because these stocks might surge 30% or then tank. But you can invest in some various biotech ETFs, and there's one of the major ones out there is IBB. That's a ticker for it, and it's that one's had struggles along the way, but it's perked back up. It's having a strong day today because it's not just the Loxo deal. There's a big J.P. Morgan healthcare conference going on, so a lot of companies are announcing revenue, revenue estimates or other things, and so there's a lot of medicals that are doing that. IBB, obviously, really, it'll rise and fall with the biotechs too. So there's a lot of risk in this one too.
Yeah.
Don't get me wrong, but this is something that, it's a little less volatile.
You don't have the individual stock risk.
Individual stock risk, but there's big sector risk, and during a correction, biotechs are going to get hit. But this is one way. There's definitely plenty of other ETFs out there in the biotech space, but this is a way to, maybe get involved, if you want to be in that, but not really take on that risk.
Now it's a little extended. It's come up quite a bit. It's lows below 90, and now it's trading at 105. So it might not go up a lot more. It just got above its 50-day moving average. It might have to take a break. Yeah. But let's talk a little bit about, okay, we have the follow-through day. We can also kind of play more general ETFs as well. So if you're not seeing a lot of stocks out there that you're like, oh, I'm not excited about buying a stock that is not coming out of a proper base, you could kind of pad your portfolio a little bit with some of the general ETFs of the general market indexes, right?
Yeah, I mean, there's the SPDR, SPY, that covers the S&P 500. There's the QQQ, and it covers the Nasdaq 100. That's a little more growth oriented. You could even go into something more really growth oriented, like we have the Innovator IBD 50, which IBD is affiliated with, but tracks the IBD 50 in many ways, and so that one. There's ways to go at it where you can take part in a rally, at least in the short term or even long term. There is an ETF market strategy where you simply buy in sort of a broad ETF when we have a follow through day, and then you get out when it's a correction. And so that's a good way to sort of like participate if you don't want to be that active.
And the idea is that you can kind of scale out of the ETF into individual stocks if they start presenting themselves. Let's talk a little bit about another industry, the computer software group. That's been another one that's been very big on our radar. We have Twilio, that is one of the leaders there, and it's a volatile one, so it's a little bit tricky to handle, but what's going on with Twilio?
Twilio's having a really strong day. A lot of software names are doing well. We have this on Leaderboard or Leaderboard watch list, and it's one that's sort of like it tried breaking out, and twice it came back below the buy point, invalidating it beyond all belief. It's back in that zone, and so it's like, oh, you might be thinking, but it's not valid. It hasn't formed a new buy point yet. It's really tricky. But the relative strength line is at a record high. It's definitely one of those names you want to keep an eye on. There's a lot of others in that space, throughout the software sector that are doing very well. Yeah,
and Twilio looks like it's up about 9% currently. So we'll see if it holds those gains and continues to make further gains. That wraps it up for us today on the market update. Thank you very much for joining us. Don't forget that we have a lot of social media platforms that you can follow us on. We have Facebook, Instagram, we have Twitter, and our YouTube subscriber channel if you'd like to take a look at that with a lot of videos. We also have the AMA, Ask Me Anything, with Alyssa Quorum and Ken Shreve coming up, so stay tuned to that YouTube channel for more information on that. And thank you very much for watching today, and we'll see you next time.